Welcome to another episode of the Weekly Crypto Check-In, recorded on August the 6th, 2025. I'm your host, Robert Swarthout, and I'm joined by my co-host, Andres Sandate. How's it going, Andres?
Good, Robert. I hope you are doing well. We're here in early August. I know it's been a couple weeks since we recorded, and my kids are back in school, so things are much quieter, a little bit more of a routine. And you look up, and there's all this stuff going on in crypto, and glad that we could jump on. How you been?
Doing good. I don't generally like to talk about the weather, but it has been crazy here in Atlanta the last few days. It feels like late October, early November. But next week we'll be back to August, so no worries.
Yeah, exactly. Well, it's we got an early preview of what fall and football and the Southeast is all about football, as people know. So we'll early indications. So but lots to talk about here. We find ourselves August 6th, and we've had a big report from the government come out on crypto and some partnerships, a little bit of the SEC, but let's jump in.
Yeah, well, our first topic is going to be about, do crypto cycles have historical patterns? This is somewhat of a rhetorical question, somewhat of an actual question, and just an observation. I think part of the answer is yes. Every cycle is different, but people are always, especially technical analysts in crypto, are always looking at the charts, trying to figure out when they can predict the next whatever, up or down. And so if you kind of rewind in history for the 2017 bull run, for the 2021 bull run, and for what looks to be a 2025 bull run, whenever the Bitcoin dominance, so that's Bitcoin versus the rest of the market, whenever its MACD had a bit technical here, had a bearish golden cross, basically when I believe a 200-day moving average and a 50-day moving average, when they cross on that chart, that is indicated the beginning of alt season. And for some alts, it goes, some go sideways, don't do much. Others go 10 or 100x within 3 or 4 months.
And when you say beginning of alt season, just to cut in, so for our listeners, when you say alt season, you mean the alternative tokens out there, the alternative cryptos.
Basically everything but Bitcoin.
Everything outside of Bitcoin. So Ethereum and Dogecoin and all these others.
Yeah, pick your favorite coin.
Yeah.
May go up or down, but alt season generally it's like shooting fish in a barrel. You get very confident, or you can get very confident, and that's when people start over trading, chasing. They may have price targets, and like, oh, what this time is different. It's always going to go up. So they don't sell, then they end up getting to hold their crypto for another 5 years. Anyways, we're not going to talk all about the technicals here, but it's that cross happened. It happened roughly a week ago. Crypto hasn't immediately taken off, but it just kind of lends more credence to the idea that we are in for an interesting fall here in crypto, and maybe early part of winter. So,
I don't know if the quote is attributed to Warren Buffett or another famous investor out there that said that history doesn't repeat exactly, but it often rhymes. So you're seeing that in a lot of news articles, and a lot of people looking at the price of Bitcoin and trading in the 120s. And I've seen different reports out there that we always have to say, well, this isn't investment advice. The show is more about the headlines, but you are seeing some headlines out there from people saying we could see this big pop in Bitcoin. It could hit 225, 250 over the next year and a half, 2 years maybe. So it'll be interesting. Something to pay attention to for sure.
Indeed. So moving on to our second topic, PayPal is now enabling merchants to accept crypto. So obviously, I can't imagine there's many people that live in today's society, at least here in America, that have bought things online that haven't bought it through PayPal at some point. And generally that's through your bank account or through a debit or credit card. Well, as of basically now, PayPal has enabled their merchants to accept up to 100 different cryptos as part of that transaction. And once the transaction is quote unquote confirmed, it would convert it into whatever currency that the merchant wants. So this is the future. I didn't expect PayPal to be on the leading edge like this, which is kind of cool to see someone that is surprising to it. They definitely have a lot of reach that could kind of nudged us along a little bit faster. But it was a cool headline. So
yeah, well, and a couple of just additional thoughts around it. Number one, converted instantly into a fiat or stable coin, and the I guess the recipient would have the option of converting it into PYUSD, which is PayPal's stable coin, and earning an additional 4%. So it's sort of like their version of I guess you'd say, a money market account, where a lot of these bank accounts are out there. These alternative savings accounts are out there offering APYs of 4%, 5%. So it's sort of like right in that range. Then the other thing is more of a question for you with this move and this integration. Do you have to have like a MetaMask or a Coinbase wallet in order to make this?
That's a great question. I don't know that answer, and admittedly, you probably don't even need to have a particular wallet. My guess is they're going to give you, you're going to say, I want to pay with Ethereum, I want to pay with Bitcoin, or whatever it may be. They're going to give you an address. You would need to send it to that address, whatever quantity it is. And at that point, PayPal would watch for that transaction to be confirmed on the blockchain, on the respective blockchain. And then the transaction would be completed at that point.
Yeah. Cause I have a Coinbase account. I mean, so I'm going to have to go check out the app after the show and see if there's, an app, like a new update or something that allows me to receive, right, the payment, and how that impacts, what my Coinbase account is saying. For example, if I receive payment in a crypto.
But this is PayPal in this case, not
or PayPal. Yeah.
Yeah. I'm sure there's more details that will need to be kind of made public, but
pretty interesting.
Yeah, it's we've said this multiple times this year, especially over the last 4 months, but even 9 months ago, this was not going to be on my bingo card for 2025 to have this part of our conversation.
Yeah.
What PayPal or whoever it was, this was just like, this seemed like fantasy land. But things are moving along quite quickly. So
they sure are.
Yeah. Another cool update, and we're going to talk about the SEC a lot in this update, and we're not going to be complaining about the SEC. This is going to be a lot of positives. So this first one is they have, we're going to soon be allowing the ETFs. If you're an owner of ETF shares of the Bitcoin or Ethereum ETFs, you can redeem those shares for either a Bitcoin or Ethereum in kind. And this was one of the big asks early on, but everyone was so excited to get any ETFs, they were willing to let this go. Because I believe this is common for normal stock ETFs. You can do redemptions in this manner. But again, this is a one-way street. This is not currently, as far as I can tell, the ability to bring Ethereum or Bitcoin to an ETF and say, please give me shares. I think that'll eventually happen, but right now it's just the redemption portion.
Yeah, it's just kind of, it further aligns crypto exchange traded products or funds with, what are, what's always happened with other commodity based funds that are out there. So a lot of inefficiencies. I mean, the headlines, we'll get into, but a lot of inefficiencies being addressed through the use of crypto, but also just a lot of enterprise adoption and government adoption. And I just think we're only beginning to see a trend of that here as we, roll through 25 and into 26.
Yeah, 100%. And what will be interesting to see is how soon after they allow the ability to bring Ethereum or Bitcoin to get shares. That seems like that's gonna happen. Does it happen before we get alternative crypto ETFs, spot ETFs? I know we'll find out as time goes on, but a lot will happen this fall is my assumption.
Mm-hmm.
Our next topic in the Coinbase is partnering with JP Morgan to allow Coinbase customers to fund their Coinbase account from their JP Morgan accounts. But particularly, it's supposed to be able to fund your Coinbase account with your JP or your Chase credit card. We were talking before we started airing. Funding a crypto transaction from a credit card seems bananas. And why they're even allowing it, because you can't go buy Apple stock with your credit card. Why can you buy Coinbase or shares?
Yeah,
I don't know.
Let's see what kind of cash advance I have on my Chase Sapphire, and I may
Yeah.
have to go make a make an investment into some crypto, but
Yeah.
it is fascinating. Like, these are not headlines that we would have seen six,
No.
8 months ago, and we saw another one of these 2 weeks ago with
Right.
PNC Bank,
Right.
and so we were commenting before the show went live that this is the second major financial institution to ink a partnership with Coinbase, and you got to think there's more in the hopper.
Yeah. Their deals team, man, they must not be working. They must be working weekends and overtime. So they,
Yeah, it's pretty fascinating. The seamlessly linking of the Chase bank accounts and the Coinbase wallets, it's a interesting move, with especially if you think about younger consumers or the demographic of consumers who probably haven't been inside of a bank branch in their life,
right.
uh, or
Long time.
or certainly just don't use bank branches.
Mhm.
Now, when the executives at JP Morgan talk, especially Jamie Dimon, they talk about the importance of branches.
Mhm.
And you do still see branches around,
Quite
the
often. There's a
country.
lot of them around, which just
Yeah,
blows my mind. Yeah.
a lot of them. So this is further merging, a digital world with a traditional retail bank. And yeah, I think it's the interesting thing is the credit card aspect of this. Like,
Mhm.
we didn't see that much with PNC Bank, but Chase obviously has a huge credit card business.
Right.
So that's the element of this headline that, we see the traditional finance and digital
Mhm.
asset space converging.
Yeah, and I think the last little bit here is that we haven't mentioned is you're able to take your Chase Ultimate Reward points and redeem them basically into cash on Coinbase to be able to buy crypto. So it's I don't know, crazy headline, but it is functionally reality at this point. So
Hmm.
anyways, so this next topic, we talked about this months ago when I believe right after Trump was elected and he kind of started appointing people for office or different positions. And the crypto czar, David Sachs and Bo Hines is, I guess, slightly under that, I believe, in I guess, a hierarchy standpoint. They were tasked with writing this crypto report. The crypto report was due 180 days later. Well, here we are. That report was brought. The White House had it for about a week, and then they released it to the public a week ago, this last Friday. And there's good things in it. There's not necessarily bad things in it, but there's also some things missing. Most notably, the
Yeah.
information on how much Bitcoin the U.S. holds was absent. Bitcoin reserve absent. I find that intriguing. You could come up with all sorts of reasons why you think it was not included. I don't think we're really probably properly equipped to really speculate on it. But the cool thing about the report is it basically continues to push the agencies to work together. You see the CFTC and the SEC doing roundtables. So the SEC did crypto roundtables, 6 of them this last early part of the summer. Now the CFTC is going to do one in conjunction with the SEC. The SEC is going on a roadshow to go do more of their own roundtables for people that couldn't make it to DC for them. So it is the promise that crypto was going to be a priority for the SEC under Paul Atkins and for the Trump administration seems to be really continuing to push forward. So kind of cool to see.
Yeah, I mean, I think you said this earlier on with this headline. I mean, I think all of us watching and that certainly pay attention to what's happening in crypto would have loved to have seen what does the government hold? What has the government seized or come into with respect to this crypto reserve? I think people are going to continue to pound the table and want to know what that is.
Mhm.
I think a lot of the other things that are in there are obviously momentum for the industry, to
Right.
your point. But it's the but part, right? It's the but why can't we know what we
Mhm.
actually own? So I mean, I think it's a good headline from the standpoint of yes, they did hit the deadline,
Mhm.
but we had an executive order that we would hear and see what does the government own? Let's do an accounting. So we'll just have to see. Hopefully, in the next whether it's the next report that comes out or in this next wave. I don't know particularly why I have this feeling as a
Mhm.
citizen or as a taxpayer to know what we own, but I just more out of curiosity. I think that clearly the Trump administration has been pro crypto, and so is the regulatory structure in DC. So maybe we'll find out. But overall, I mean, favorable what you saw in the report.
Yep. And for those that are interested, we'll be happy to link this 166-page PDF report in the show notes if you all are so inclined to want to read up on this.
Yeah.
So, well, moving on, and staying on the topic of the White House. The White House is preparing an executive order for Trump to sign. So says the news, that would punish banks that discriminated against crypto companies. We have come 180 degrees from a year ago. It was almost encouraged to not do business openly with crypto companies, and how now they're the same banks could end up getting punished going forward. So,
yeah,
I might have mentioned this a few times in the past. The fund is Teton has had bank accounts from time to time, and after the third time of getting debanked, I was like, we don't need a bank account anymore. The idea that when time comes to need a bank account, that it might be easier to get seems to be coming soon. So that is the exciting bit here for me.
Yeah, I remember 2 weeks ago we had a headline about the American Bankers Association was, pushing or lobbying to slow down, the applications for a couple of banks. Was it Circle and Ripple?
So yeah, for bank charters for those.
Yeah, for bank charters. So yeah, it's interesting. I mean, I think the whole industry, the whole banking industry is obviously there's much more asset concentration in the top 8, top 5 banks, right? These systematically important financial institutions, or SIFIs.
Mm-hmm.
It'll be fascinating to see how the banking industry reacts to what is an accelerating and what is a fast moving downhill snowball effect, which I feel like is happening across enterprise and governments and boardrooms with respect to things like AI and digital assets and crypto and Bitcoin, and not Bitcoin so much, but just the conversation there, the whole notion of what you have to wrestle with as an executive and a board member now to be competitive and to be relevant, especially in banking and financial institutions, is pretty dramatic shift, and it's only accelerating under this administration.
Yeah, it's interesting is like I don't have any real way to back this up, but had you looked at the way the banks had to be, the banks had to deal with crypto companies prior to the Trump administration, it was almost like they had to play by unspoken rules, right? And if the rules were spoken, they weren't ever making it to the public. It was somehow happening in back channels. Now you'll move forward. It appears the rules are being very overtly public about what needs to happen and what doesn't need to happen, which is maybe the right way to go about it.
Yeah, it provides more clarity and direction, right? Yeah. You may not agree with the rules or may not agree with the direction.
At least you know what you're playing by. You don't.
But you know the framework. And there's one thing that markets like, and that's markets like structure. They like certainty. They like direction. We can react to that. As an industry, it's much harder when it's you try to innovate, you try to be, if you will, ahead, and then under at least the last SEC regime, there was just so much uncertainty, so many gray areas, and more of a approach of regulation through enforcement, which was a much more reactive approach.
Yeah. So back to the SEC, we have got a draft form of what could be listing standards for crypto ETPs or ETFs. This is exciting because again, this just brings general liquidity to the ecosystem. But again, in the spirit of setting rules and guidelines in place, this is exactly what this is. It always seemed a little black box how the Bitcoin one got approved, how the Ethereum ones got approved. The SEC is now proposing that any crypto spot ETFs for that particular crypto that has been trading on Coinbase futures for 6 months is eligible to have basically an express approval through to become a spot traded ETF. If it doesn't have that kind of futures coverage, it would have to go through the standard listing of the 40s Act for ETFs.
Yeah,
so more arduous process of sorts, I would guess.
Yeah.
But I guess the next question is, when do we get more crypto ETFs? And it looks like September, October, there's a lot of approval dates sitting on the SEC's calendar for some of these. So there's probably potentially up to 10 different cryptos that fall within that 6 months, or at least having that 6-month window. I don't know. Again, if you, I don't know if you want to put a tinfoil hat on here or not, but we're potentially in alt season. All of a sudden, you need more liquidity in the system. You start allowing spot ETFs. You start making it easier to buy these things all over the place, and it could really add some fuel to the fire.
Yeah, and I go back to if you wanted to buy it on, like, let's just say one of these altcoins. If you wanted to buy one of these altcoins through a wallet, like an exchange, right? There's now a variety of different places you can do that. I mean, I went on my Robinhood account last night and just was curious, like, what can I buy now with crypto? And I mean, they've been doing crypto for some time, but other platforms where I have accounts, you can't, right? You can't go to Schwab, you can't go to Vanguard. Right. There's other places, but Robinhood, you could do it. And, obviously Bitcoin shows up first, Ethereum shows up second, XRP shows up third, Dogecoin maybe third, then XRP. But like, my question is, if you are a consumer, retail individual investor, if you could buy it that way, and eventually if all these let's call it retail brokerage firms in the next year or two are selling crypto, Schwab, TD, all these, if you're buying it that way and it's now available in an ETP or an ETF, does it dramatically I mean, yes, you might have incrementally more buyers, but just having it in ETF, I'm wondering if that creates an increased demand for any of these altcoins, because I've always been of the view that there's so many of them. The average person, like stocks,
there's no idea. Yeah,
they have no idea. If you own it in a mutual fund or an ETF, a stock, it's probably the public, the Fortune 500 companies, or in this case the S&P 500 companies. We don't have such a dynamic in crypto yet. The market cap of the whole space is still pretty small.
Right. Yeah.
And Bitcoin is what, half of that? More than half of that?
60%. Yeah.
Right.
Yeah.
So I don't know. It's just more of a analysis or thought, like all the liquidity that an ETP or an ETF creates. I'm wondering if you end up with a lot of product that gets created but doesn't really have a market.
Yeah, that's a great question. I think part of my hope is currently crypto is basically discretionary in the sense that it's like cash you might have in your checking account, right? If you start getting into the ETF land and further down into maybe it's like an index of some kind, you might start being able to reach money in brokerage accounts that might have a view to be a little more long-term thinking.
Yeah.
And bring a little bit of stability to some of these prices over the long term.
Yeah.
And again, there's also a gigantic pile of value sitting in brokerage accounts and retirement accounts, for that matter, that currently does not have access to crypto outside of Bitcoin or Ethereum. So,
well, I would share with you an anecdote. I will relieve the names anonymous or out of the story. But last week I had a business trip, and I was we were in the offices of a multi-billion-dollar institutional money manager. And we had a chance to interact with their research folks and their investment strategy folks. And the topic of crypto came up. And at this point in time, the firm has looked at crypto, has looked at Bitcoin, but has decided, so far, like, we're not going to do anything. And what's interesting, they come from the Fama and French, school of University of Chicago, a lot of the Eugene Fama research is around, efficient markets, and there's a framework around valuing assets and valuing stuff. And then they've further gone down, those folks and a lot of their followers have gone down the path of, there's momentum in the market, and there's value in the market, and there's, all these different factors is what we call them, but when it comes to crypto, all that, sort of dynamic of determining value has become much more difficult. And as a result, a lot of those traditional investment frameworks you can't apply them. And so as a result, a lot of the bigger money, I think, has struggled with how do you invest in this space. So it's just fascinating. That's more traditional finance,
Right.
and how they're looking at the space. But it was, something that happened last week in like real time. And it's like, I find myself in these conversations with people who have very sophisticated views of financial markets and valuing companies and valuing assets and managing money. But then when you throw crypto into it, man, you get an emotional reaction.
Yeah. Very quick aside here. The SIFA summer barbecue that happened a couple weeks ago.
Yeah. Yeah.
Literally my first conversation once I got my name tag, I was talking to a guy and he's like, "Oh, crypto." He saw it on my name tag. He's like, "Has crypto figured out how to have a cash flow yet so we can be interested in it?" It was literally his statement. And I'm like, it's kind of not the point.
Yeah. It's crypto figured out how to have cash flow. Yeah, it's true. Yeah. It's so interesting. Yeah, it does create a reaction. There's no doubt.
Yeah.
Well, we've got a couple more headlines with the SEC.
Yeah. So this one probably be pretty quick. The SEC has been great lately about coming out and saying what is or is not a security. Before, they wouldn't answer the question. They would just claim it all was, and without really saying it was. In this case, they're saying that liquid staking activities are not securities. So what does liquid staking activities mean? Staking means that you have your funds in a network like Ethereum or other, I guess, proof of stake networks. Literally, instead of proof of work like Bitcoin, where they do a bunch of computer math, proof of stake, this basically means you leave value on the network. And the more people that have it there, the more, quote unquote, the network becomes secure. Liquid staking a lot of times does have something that looks like interest. So you get staking rewards, and it can be shown as a percentage. So it feels a lot like interest on a bank account. But they're saying those activities are not securities, which I would say most people would agree with, outside of the people that just straight up hate crypto. So
yeah.
So that was cool to see them say that.
Yeah, I mean, there's, it's interesting, this emerging, I call it sort of an emerging approach that's coming out of DC and the SEC. We saw a lot more bipartisanship with respect to one of the recent bills that was passed, and obviously the midterms are not terribly far away, and it feels like there's a lot more positioning happening leading into this set of midterms than almost ever before with respect to crypto specifically.
Yeah.
And positioning. And we're just seeing a lot more, we're seeing a lot more clarity, and these staff announcements that are coming out are providing a lot more, meat for us to sort of chew on as an industry and digest, and then, allow people to react, from the standpoint of enterprise and creating product and creating solutions.
Yep. Indeed. So our last topic, again, the SEC coming out with more guidance, basically said that stable coins that are fully collateralized stable coins, so they are fully backed by dollar and dollar equivalents, which now that we have the Genius Act signed into law, there's literally a law that spells out the rules around this. But basically the SEC says those stable coins, examples of those might be Circle USDC, Paxos's USDP, which Paxos used to do one for PayPal. That I think was the remnants of that one. Ripple stablecoin. But anyways, they may be treated as cash equivalents on corporate balance sheets. So before they had to be held as a liability, if I'm not mistaken.
Yeah, it was like held as a contract.
Right. So now the stablecoin can be held as cash equivalents, which this is the further and further intertwining of crypto into mainstream finance. This will be looked at as and passed over by most people as not important, but this is like a fundamental building block to getting crypto to be part more of that just general plumbing that we might see in the future.
Yeah, well, I'm going to ask. I'm gonna ask for a moment, just because I remember going back in December when we wrote the letter for January 2025, and I said one of the things I was going to be watching was how many treasury staffs, or how many corporate treasury departments start to really adopt crypto and look at crypto as an asset on the balance sheet. And this is another data point around okay, now it can be looked at as a cash and cash equivalent on the balance sheet.
Right.
There's obviously a lot of accounting implications, a lot of folks are going to be paying attention to this. It's no longer a contract, or therefore potential liability. And so, yeah, really, really interesting updates this week.
Yeah, and the cool thing is who does this benefit? Well, who can really take advantage? Like multinational corporations, I think, are the first big example, right? And we've talked about this in the past, but Starlink was using a stablecoin to bring funds home from foreign markets back to the U.S. in an efficient manner for more nascent local currencies that they've dealt in. So we're just going to see more and more of this, and to the point where we won't talk about it, and it'll just be happening every day. So pretty cool.
Yeah, definitely.
Awesome. Well, thanks for joining us on this episode of the Weekly Crypto Check-In. To stay updated on future episodes, you can find us in any podcast player by searching Teton Crypto Capital or the Weekly Crypto Check-In. Take care.
The information presented in this podcast is for educational, informational, and entertainment purposes only and does not constitute financial, investment, trading, or any other advice. The content provided is general in nature and not tailored to any individual's specific circumstances. Always conduct your own due diligence and consult with a professional financial advisor before making any investment decisions. Cryptocurrency trading involves significant risks, including, but not limited to, the potential for loss of all or a portion of your investment, market volatility, and regulatory uncertainty. The hosts, guests, and producers of this podcast are not responsible for any decisions or actions taken based on the information discussed herein. Cryptocurrency is not legal tender in many jurisdictions and is subject to market risks. Past performance does not guarantee future results. This podcast does not endorse or guarantee any investment outcomes or results. Use of this podcast implies your acceptance of this disclaimer.